Wei Shan. She's Chief China Economist at Goldman Sachs, joining us this morning. So thanks for coming into the studio. And I think, as we said, we can start in that property space and sort of the overhang. I mean, it's really the perennial problem in mainland China.
Yeah, that's correct. When you talk to clients, it feels like we have been talking about this for the past 5 years, and yet it's still a very important part of the economy. If you look at the data past couple months, you do see accelerated decline in activity, in prices. So it's indeed very concerning. I was in Beijing and Shanghai talking to clients, and some of the clients, if their own property prices are falling, that influence their sentiment and to some degree affect their view on the market, on the broader economy.
So how much is that then tied? Have you been finding both from the authorities you talk to and also anecdotally from the people as far as boosting consumption is a key push? It's going to be. The Central Economic Work Conference is going to be meeting, I believe, next week in the run-up to the National People's Congress, where we're expecting to get policies that will boost consumption. But how much do you see, as an economist at Goldman, essentially seeing that the value of their homes is directly tied to the ability and the desire to spend?
It is a important channel. If you think about average households, what is your biggest asset? It is the real estate. So the price decline certainly, no doubt, will have a negative impact on consumption. That said, we are of the view that in the first few years of the housing downturn, we talk about housing's contribution or drag to GDP growth or broader economy. And now it feels the broader economy is pulling down property as well. In the sense, if you don't have jobs and income, you don't consume, and the overall economy is slowing, and that put further pressure on people's buying capability, and therefore you see prices falling.
What happens, though, in terms of the response? You've got the fiscal side, the monetary side, but there's been commentary, for instance, from the PBOC governor writing in the People's Daily newsletter, or newspaper rather, but saying that they should be avoiding China excessive policy adjustments. So it tells you maybe they're not looking to make any sort of changes in the near term?
Yeah, so if you look at the recent PBOC communication, there is somewhat a still accommodative but less dovish tone in their communication. I think if you look at, FX is no longer a constraint for PBOC to cut rate, but perhaps the bank interest margin is a constraint for PBOC to further reduce interest rate. And some of the policymakers perhaps also have the view that cutting 10 basis points, 20 basis points, that's not really getting at the core of the problem. If you look at it historically, we did analysis looking at all these housing busts around the globe. It takes a really long time to get to the bottom. On average, it takes 6 years. So by that metric, we're still not at the bottom yet.
How much do you think authorities will allow the renminbi to appreciate? That would also give a little bit more spending power in the pockets of households.
I think that channel might not be the most important on policymakers' mind, just because if you look at how much the Chinese consumers buying foreign products, not that much. So I think in terms of managing the currency, there are a couple of considerations. One is managing the flows. You want to make sure the currency appreciation, both direction and pace, is not causing massive inflows and outflows and market volatility. Then secondly, I think the whole RMB internationalization, especially in this geopolitical environment, is carrying political and economic significance. And if you want others to use your currency, you need a stable and perhaps mildly appreciating currency.
Okay, then in terms of the policy steps that you do see eventuating then, because we're coming into the Politburo meeting, we're coming into the Central Economic Work Conference as well, where do you see them really trying to hone in on then for next year?
In our expectation, as I said, it is the broader macroeconomy, the labor market, the income growth that is impacting the property sector. So I think a macro policy perhaps need to get back to the basics, the monetary policy, the fiscal policy, the credit policy, and the housing measures collectively really drive the broader economy and income growth to move higher. And that will solve a lot of problems, including poverty, local government debt issue. I think right now, targeting the bigger picture perhaps is more important than targeting a specific problem area.
I see in your tour of economists going to Beijing and Shenzhen, also offshore, you said just about every potential investor asked about AI. How should the investor for China AI? We've been covering more threads today, CamberCon, all these different companies, including there's a new debutante today in the AI space here in Hong Kong. How can you look at the AI space from a different lens than how you look at AI in the United States, which has powered, obviously, the S&P to still near those record highs?
In our client conversations, people worry about AI's implication for job market. That's not just for China or U.S., it's globally. Eventually, how do we manage technology innovation and potentially lack of job opportunities? But I noticed something interesting in the onshore discussions. Investors are more concerned about AI bubble in the U.S. And if that correction happens, that would have implications for Chinese equity market. But offshore, the questions are not really that much about the AI bubble outside of China, but more about is there any bottleneck in the China AI sort of push, and is semiconductors a real constraint, and how China's AI push will be different than the U.S. I think reading government policy is pretty clear. Even in the consumption document creating 3 trillion RMB of consumption areas, there is a heavy discussion about marrying AI with the supply of goods and services.
Then on that, if people are concerned around the US AI bubble and the potential that also pops, does it also become an issue is there a link to exports in China as well? Because if you've got a lot of people's wealth that's being tied up in that wealth generation from the AI bubble, and then you have that pullback in spending, I mean, is there any sort of read across risk that you look at for next year?
Certainly. I mean, when people ask us, our view is that Chinese exports will remain strong in the coming years. At the end of October, we raised our forecast for the next few years. And that was the largest GDP revision in a decade. And, when people ask what are the risks to your view, externally, that is whether it's AI-driven or some other event-driven, if your trading partners are in recession or in economic slowdown, that won't be very conducive to this export-driven growth model.
All right. Hui Shan, thanks so much for joining us. That's Chief China Economist at Goldman Sachs joining us this Friday morning.